Hi, this is Deepak Rao from Acer Tax and Corporate Services. Welcome to the session on GST credit on COVID expenses. The businesses and organizations have been incurring various expenses for prevention and management of COVID. And the big question here is whether GST law as it stands today allows for the companies to take the credit of the GST paid on such expenses. Because we are in a unique kind of situation, completely unexpected kind of pandemic. Definitely, there is no scenario or situation envisaged under the GST law. So we need to interpret based on whatever the GST law currently provides. And we have to understand based on the current interpretation whether the credit can be availed or there is a risk of rejection of credit if availed by the companies. In the next couple of slides, we will look at the key COVID expenses incurred by the companies and what are the possibilities of availing the credit of GST. The expenses incurred by the companies in relation to the COVID management can be classified into three different big buckets. The first one is for the safety of the employees who are working in the organizations. These items are primarily goods that are procured in the nature of sanitizers, masks, gloves, PPE kits, and temperature scanner, etc. The second bucket of expenses is the medical insurance procured for the employees if they were not previously covered for COVID. This is a sizable expenditure because of the number of employees in an organization. The third kind of expenses is in relation to setting up home offices for employees. Now the organizations have come to the realization that the COVID is a long-term management and therefore the work from home kind of work arrangement can spread into the next year. So they are setting up home offices for the comfort of the employees by providing desktop workstations, chairs, UPS system, routers, and other connected network facility. So a lot of expenses are also being incurred by the companies for provision of the home offices. So even these are in the nature of procurement of goods that would attract GST. So the question is whether credit can be availed on these items or there is something in the legislation that can prevent the availment of credit. The input tax credit eligibility is primarily determined by the definition of input and input services, under the CGST Act, and then by Section 16 of the CGST Act, which provides for the conditions which has to be satisfied to avail the credit, and then Section 17(5) of the CGST Act, which puts various restrictions on availment of credit in relation to specified goods and services. So in the context of these three, we will look at the first item as to whether the GST credit on sanitizers, masks, gloves will be eligible. To determine the eligibility, we have to first answer the question whether these items are used in the course of furtherance of business. So the question is whether these items are fundamentals and a requirement for the performance of the task by the employee. Strictly speaking, if you ask whether somebody can do their activities without sanitizers, masks, and gloves, definitely yes, and people have been doing that activity. So therefore, directly it can be said that these are not required or a must for the performance of the activity. But there is also the argument that unless the health of the employee is taken care of, his health safety is guarded, there can be no contribution from the employee towards the business operations, and therefore these expenses are a must, and indirectly it can be definitely argued that these expenses are used in the course or a furtherance of business. Without these items, there can be no business operations. The second question that has to be dealt with is whether these items are used and is a personal consumption by the employees. Now, where the aspect of personal consumption comes into places where the goods or services are not an essential requirement to perform the job, but it has been only given to the employee as a part of a welfare scheme or a reward scheme, which is outside the purview of the business operations that are being undertaken. If we have answered the question positively that the sanitizers, masks, etc. are required and used in the course of furtherance of the business, then it will automatically answer that it is not an expenses or it is not a consumption for a personal need. These are mandatory items that has to be made available to the employees, and these are as good as any other goods and services that is made available to the employees, such as the premises, workstation, a laptop, or other services which are made available. Similarly, these items are business expenses, and these are not for personal consumption of the employees. So we have a strong argument here to say that these are used for furtherance of business. These are not for personal consumption, and therefore credit should be available. The third aspect that needs to be checked is whether this is a gift that has been provided to the employee. Definitely, this beats the common parlance, common sense, because you would not think of gifting things to employees in the nature of sanitizers, masks, and gloves. By strictly going by the definition of gift elsewhere, it is voluntarily given by one person to another without consideration. That aspect is satisfied by this. This is voluntarily given to the employees without any consideration. However, these are business expenses and does not take the color of a gift. So therefore, it can be argued that this is not a voluntary gift. This is a mandatory essentials that has to be made available to the employees, and therefore this is outside the purview of gift. So we have a strong argument in case of a point now, as of now. So credit should be available for sanitizers, masks, gloves, PPE kits, and other stuff. But we still need to wait and watch how the department interprets and how the court interpret for giving credit on the same. The second big expense is incurred by the companies in relation to the medical insurance premium. So a lot of companies are taking fresh medical insurance for the COVID, or adding the COVID also into their existing medical insurance. So a substantial portion of the expenses being incurred. And we know that medical insurance is not available as credit. It is restricted for the premium paid is restricted for availment of credit under section 17(5). But however, the section 17(5)(b), where it is restricted, also comes with a rider saying that if it is obligatory on the part of an employer to make it available to the employee under any other law, then the credit should not be restricted. So the MHA, Ministry of Home Affairs, issued an order in April 2020 stating that medical insurance for workers should be made mandatorily, should be provided. It is one simple sentence, the order said, but there is a lot of interpretations that will come out of it. Whether workers it meant, does it cover every employee of the organization, or only those who fall under the definition of workers it covers? And because the MHA order was issued in April 2020, and if somebody had premium say from Jan 2020 to December 2020, whether entire credit can be availed or only partial credit can be availed, and the insurance premiums also taken for multiple years in advance. So a contract which has already been finalized, even whether those will be covered, or only those contracts which are entered into after April 2020 will be covered. So there are a lot of open-ended questions here, but however, the intention of the MHA seemed to be that to make the medical insurance mandatory. It squarely falls into the radar provided under 17(5) that if it is obligation of the employer to provide it to employee under any other law, then the credit is not restricted. So based on the strength of that argument, medical insurance premium credit should also be eligible to the organizations. However, definitely this is not free from litigation. From which year period to which period it will be available, what portion of the medical insurance premium will be available of the credit, all those things will get disputed. So we need to wait and watch and see how the litigation progresses on this before we can be 100% sure on the eligibility of the credit. But as it stands today, there is a reasonable chance of the court taking a view that the medical insurance premium GST credit should be available to the assessee. However, the life insurance kind of premium will still be restricted, as the MHA order does not cover anything on the life insurance. The third key expenses incurred by the companies are in relation to setting up home offices for the employees, where workstation, desktops, laptops, chairs, UPS systems, routers, and other networking equipments are provided by the company so that the employee can continue to smoothly contribute to the business. There are two kind of arrangements that are seen here. In one arrangement where employee buys all the goods himself and the company reimburses him. The second arrangement where the company procures the goods and provides it to the employees. Now, in order to decide on availment of the credit, again we need to ask the critical question of whether this is used for the furtherance of business. Now, the premises definitely has no nexus exactly under the GST, though there was a certain kind of nexus that it has to be in the premises under the excise legislation. Under the GST, it is not necessary that the goods should be within the premises of the organization for the credit to be availed. So the question that has to be answered whether this is used for the furtherance of business. Of course, that can be answered in an affirmative. The very purpose of setting up the home office is for the contribution to the business. However, there could be an angle that these goods are also used for the personal consumption of the employees for their personal needs and not necessarily for the purpose of business. So for take an example of the UPS getting installed there or a router getting installed, these things can also be used for other activities unless the UPS is fixed only in relation to the assets which are used for the performance of the business operations. So there is an element of the personal consumption involved here, which can also be the case with reference to the laptop and desktops provided by the company. So the employee sitting in the premises of the company can also use these items for a personal consumption, but it is primarily for the business purposes, and therefore there can be a strong argument to say that these are used for the furtherance of business and credit should be available. However, there are other aspects of interpretation that can be made on the fact pattern. The first thing is whether the goods are recognized as a part of company's books. Now, once the goods are installed at the employee premises, the company almost lose tracks of it, or it is impossible to track among thousands and lakhs of employees of the company. So therefore, based on the internal norms and the accounting standards, the company may choose not to recognize these assets in the books itself. So it may not be on the books of the company. And in certain cases, the goods may never be returned to the company purely because they are now obsolete, or they don't have value, or they cannot be installed back at the company premises or elsewhere. So if the work from home period extends for a couple of years, then the employee may use it, and once it become obsolete, may also have the right to dispose of that item or sell the item outward. So in such cases, the goods never came into the domain of the company itself. So there are fact patterns which are possible where the goods are not recognized by the company in its books, and the company is never in the control of those assets. It is not in the domain of assets, and the goods will never ever be returned to the company. So the big question emanates whether these goods were actually put to use for furtherance of business by the company. So as it stands now, based on these discussions, it is possible to argue, possible to strongly argue that irrespective of the company recognizing it as assets, irrespective of the accounting treatment, and irrespective of the fact that these goods will never return to the company, it is still used for the business purposes, and there is no restriction on availment of credit under section 17(5), and therefore credit should be available on these items. We would need to see how the department interprets on goods not recognized in company books and not being ever returned to the company, and whether they would build an argument around it to say that that credit should not be available. So therefore, companies should be wary of that. Though a strong argument is possible for credit to be available, there can also be a variety of interpretation, and there could also be a couple of litigations on this matter before it gets finally settled. That is what I had for this session. If you have further questions or queries, kindly do reach out to me at deepak.rao@acertax.com. Thank you.